Welcome to exam.com for today's daily market comment by Mario Hadjikyriacos. I'm Cristina Marujos. The U.S. employment report fell short of expectations, feeding the narrative that the recovery in the world's largest economy is starting to plateau. Nonfarm payrolls clocked in at 49,000 in January, almost in line with the forecast, but clearly some investors were expecting more. The dollar came under heavy fire, fortunately for dollar bulls. Euro-dollar run out of steam near the neckline of a head and shoulders pattern that is acting as resistance now, so the technical picture remains favorable. Of course, bad economic news is sometimes great news for stock markets through the stimulus angle. The S&P 500 notched another record high on Friday, with investors calculating that the Fed will keep its QE program in place for longer and that Congress will make good on its promise for a $1.9 trillion relief package. Considering the rampant optimism for all the government spending, it is no surprise to see investors overlook the downside risks. Over the weekend, a study suggested that the AstraZeneca vaccine provides only limited protection against the South African strain of the virus. On the bright side, the report said that this was only the case for mild instances of the disease and that the vaccine may still offer protection in severe cases. Still, this is worth keeping a close eye on. If the vaccines prove ineffective against even a single mutation, the timeline for reopening the global economy could be pushed back by several months, dealing a major blow to riskier assets. The other risk on the radar is inflation. Prominent economists have started to argue that the $1.9 trillion package is going to overheat the economy and spark an inflationary outbreak, forcing the Fed to hit the brakes by raising rates. So far, the Fed has been adamant that it won't react to an inflationary episode, as it will probably be transitory. However, if inflation tops 3%, the Fed could change its tune quickly. The latest CPI inflation data are out on Wednesday and will be watched closely. As for today, the highlight will be a speech by ECB Chief Christine Lagarde at 4 o'clock GMT. Overall, the focus will remain on the stimulus deliberations in Congress and the pace of vaccinations worldwide, where the UK continues to lead the advanced economies. This was today's daily market comment at exam.com. Have a great week.